back in the studio with Glenn Yago, our Director of Financial Research here at the Milken Institute, and today we're talking about our new book, Financing the Future, Market-Based Innovations for Growth. Welcome, Glenn.
Thank you.
Now, this is not another what happened in the crisis book.
Hardly. This looks at financial innovations not as causes but as cures. Because if we get beyond what the failed complex products are and look at what are true innovations, those that lower cost of capital, increase access to capital to entrepreneurs and to citizens, that's what the story of financial innovation is truly about.
And the story of financial innovations is not only very long, but it's been very successful.
Correct. We can go back to the earliest financial innovations, the earliest future contracts that were written on stone in 1900 BC. In the 19th century BC by the Mesopotamians to fund future contracts for wheat delivery to beer producers. All of those were ideas of converting low volume, lower value wheat production to a higher value beer production.
And a little bit more recent in my time history, maybe what have we been looking at that financial innovations have really helped us get out of a mess or create a growth?
Well, if we look at the whole post-World War II period, both from the beginnings of the equity markets or the expansion of the equity markets during the post-war period for industrial America, very key to have that access to the equity markets. In the 1980s, after the big credit crunch in the 1970s, the expansion of the corporate bond market, the mortgage-backed securities market, all of those were very key in carving channels of credit to new entrepreneurs, new consumers that were entering both the housing and the business finance market. Later on in the 1990s, all of the value and the turnover that's occurred in the Fortune 500 companies and the move towards information and communication technology from Microsoft to the internet was initially financed by venture capital that was rolling out. And now as we move into this century, the ability to finance new medical solutions, the environment, all of those come with our ability to be able to value and capture and finance new ways of innovation.
So now we're moving towards our future because we are moving out of a crisis. It happened. What are the specific areas that you see and that are addressed in the book that we can use financial innovations to move forward? What are those categories?
We've gone through a whole series of them. We, of course, start with the basic area of business finance, how entrepreneurs can get funds in order to finance their hopes and dreams. We move on to looking at the housing crisis and try how shelter needs are met, both in terms of rental and in home ownership markets. We move into other areas that are going to be incredibly important in the 21st century. The ability to invest in human capital by increasing health, by accelerating medical solutions and cures. And we look at environmental capital as well, looking at our natural resource base, our natural capital, how those real assets can be mobilized to find whether it be cures or to be able to preserve the environment for the next century.
Housing finance is one of the topics that you cover. Can you tell me a little bit more about what financial innovations can do in housing markets?
Well, the basic problem of why the housing finance market collapsed was because of the poor structure of financial products that were in that market initially. That tripwired aspects of the crisis in the subprime mortgage market. Poor underwriting, products that were designed to fail, basically. So we try to design and look at products that won't. Basically looking at community land trust, of being able to separate out the cost of land from the cost of a house, by shared equity, by being able to share the risk of building up equity in home ownership, or providing investment into rental housing markets that were underserved by the housing finance market earlier. Looking at covered bonds or looking at ways that we can reboot securitization that's more secured by being able to have access to the underlying collateral of houses, removing non-recourse loans, and other measures that could really increase and enhance the ability to finance housing.
Now, this and much more is available in the book. We have information on our website at www.milkeninstitute.org, but it's available through Wharton School Publishing, available at Amazon and Barnes & Noble. Thank you so much, and we'll pull you back in to talk about those issues as they develop, and I know you're going to be working on some additional books on this topic. Thanks so much, Glenn.
Thank you.